Traders, it's Anthony here. I'm just looking at the euro dollar here. I'm just marking this up. I'm just picking up basically these candles back here. This green candle prior to this move, and then I'm looking at this red candle prior to this strong rally. Just marking up the body high and low of these candles on the daily time frame, just to give me a bit of a point of reference. So we've got these levels. We've traded down into a daily. This previous low we haven't quite cracked. This green candle low here, so be careful. This could trade a little further. So I'm actually looking for a counter trend trade, and I'll give you my reasons for that. Anyway, I've just marked up the daily, and then what I'm going to do now, I'll go down to the 4 hour, and I want to pick up back here, just see what that looks like. Current price, we can see this green line running through here. I'm just going to grab, yeah, look, you know what, it coincides. We've got this 4 hour level nested with the daily. We see back in here, there's this strong level of support down through here. So that'll be a high on the 4H, the low on the 4H. So we'll do that. So we've got the high and the low of the daily and the high and low of the 4H. And come back over here, because basically what I'm looking for is a counter trend trade based on the fact that we've got this bearish trend. Here's the thing. We get this leg down, retrace, leg down, retrace, leg down, retrace, leg. Wow, where do you want to go with that? Retrace, leg down. This kind of thing plays out. Okay. When it's overextended and trades into a level like this, we generally get the retrace. And then if you grab your fib from your high to low, it's trending, and we're always looking for. This is an optimal entry around the 61.8786 for short. But I'm interested in playing this counter trend, so I'm buying at this level, and we'll trade this back up, see how we go with it. So that's my thing with this at the moment. By the way, guys, make sure you click the link below and join my free Telegram group and check out my website. So what I've done, I've marked up a few things here. This is coming back to Sunday, Monday open. So there's your Monday open, weekly open, I should say. It spikes up, takes out liquidity, and then we get this bearish trend for the week. Look at that. It plays out time and time again. You know, early in the week, spikes above, and then we get our trade. Traded back, rejected at the weekly, and we've got this move here. I've also marked up, this is yesterday. Let me just go out to the daily. I'll show you what I got here. I've just marked up this yesterday's red candle, the high and the low, just to get my bearings, yesterday's high and low. So we've actually cracked yesterday's low. So I'm thinking, you know, I mean, it kind of adds to my argument that, you know, and we're trading into this level here, that we should see this retrace. Counter trend, you know, you don't want to be selling at this level. Anyway, we'll go down the time frames. 4H, I'll show you what I got here. I've marked up this green candle here, level of interest, point of interest, somewhere, there it is. Pull it back. Daily, daily. Now, the other thing that's of interest here is this candle. See this candle here? We actually have, if we grab this candle left and then we pull it through to the candles on the right, we've got an imbalance, 4 hour time frame imbalance. That tells me that this is most likely going to trade back through at some stage. When? Good question. But definitely have that marked up on the chart and keep it there as a reference. Possibility that, you know, this trades up. So what I'm looking for here now is my entry, which I've already entered. Buy. It was a market buy. There's still time for you to jump in here. Go for broke with your risk reward. But what I'm going to do with this is set my stop loss. See this thing here, this daily. I'm going to set my stop loss slightly beyond the middle of this daily accumulation. Yeah, I mean, something like that would work for me. So there's a stop loss. Done. Take that out. I have an entry point in around here's my buy zone. Stop loss. I'm going to grab this thing, the trend-based fib extension, but it's not that. Modified it. And that gives me my risk reward tool. 1-to-1 is here, and it seems to sit nicely under this daily level here. Look at that. And these lows. So that's a great spot to take profit. So I'm just going to set my TP1 slightly under 1-to-1 risk reward. This is how I kind of plan my, and I want to take, actually that should be 65%. I'll fix that later. 2/3 of my position off. So on MT4 I'll open three positions and then take 2 of them off here. We're nearly there now. and then trail the rest. Just let this mess around here as we trade into the London Open. This could trade further down, so I think there's plenty of time. So TP1 close 2/3, and then at that point, this is in the money. Pull the stop loss up to be in the money, and the rest is risk free. And I mean, at that point, go for broke. There's a couple of targets up here. There's the 61.8 fib zone resting slightly under these lows, so there's a target. So we could just call that a T target. And another target would be, that's great. So we got T1, there's T2. Let me just copy and paste that. Copy and paste. Target 3, well, have a look at this. See, we've got this weekly, daily. So we've got the weekly open, previous day high. T3 will be slightly under the previous day high. Okay, around these highs here, these lows. Yep, okay, I'm good with that. But really, I mean, at this point, I'm trailing this with my stop loss. And these targets here, I mean, depends on how many open positions you've run, you have in the system. You could open 6 of them if you wanted to. And you could just be closing some of these on the way up. Take partial profits on the way. All right. So anyway, that's a bit of a plan. And I mean, look, if it continues on, that's fantastic. Just keep following it until we see a break of structure, But that's a bit of an idea, guys. Click the link below. Join my Telegram. Love to see you in there. And with that, comment. Great to hear from everybody. Safe trading. See you in the next video.